All right, good morning, ladies and gentlemen. Today is November 18th, 2020, and I am back with another edition of the live show on Wednesday, every Wednesday at 10 a.m. Quick programming note, if you hit the live show page and you see the black screen there and it doesn't start playing, well, just hit F5 on your keyboard to refresh the page. I noticed that, well, one time when I tested it out, it seemed like it was kind of flaky, but I don't know. Anyway, so each Wednesday morning I do this live show, and then right after I finish up, I post the replay, and the replay is available for the rest of the week until I go live again. So you always have the option of watching the replay if you missed any of the show. So today, going to be a relatively quick show because we only have a couple of open trades and we only have a few pending trades, and I'm going to go over that. So earnings season's winding down. We had a few trades that got closed over earnings, but where we are right now in the cycle is honestly the most important thing. So the way that our system is designed is that it takes advantage of the swing trading cycles, right? And so as you can see here, we just had a pretty massive up cycle all the way back up to the top of what I think is kind of a big giant trading range. Now, of course, the market could break out here and run a little bit more, right? But it's kind of overbought. Actually, a few of the indicators that I look at show that it's significantly overbought. It's well, if anything, it's kind of pushing the envelope here, right? After this run up. So, here's the thing: is obviously you can see how the cycles work here. So we had this. Um, well, there was a big run up from July to September, and then we had a pullback, right? And so the way that the system is designed, as I was alluding to earlier, is that the system looks for stocks that are in an uptrend, and then it looks for them to have like a pullback, right? So when we get a pullback like we had here, then stocks will start setting up, excuse me, on the pending list. And then when the market makes a turn, or actually, the stock makes a turn, then somewhere in this area, if this were a stock chart, somewhere in this area is where the trigger price would meet the actual price, right? So a stock or the market starts to pull back a little bit after a run up, and then you get a trigger price on the ones that hit the pending list, and that trigger price kind of floats down, floats down, floats down, and then when you get a change in trend, it gets triggered in and we write it for an upcycle, right? And then of course, and so you can see a couple cycles on here, but long story short, the market's just basically, in the midst of and or nearing the end of a pretty significant upcycle, and so there's a lot of risk in jumping in right now. Now here's the funny thing is that it always seems like when the market's, headed up and after a big rally like this, everybody gets bullish and thinks that, comes up with all these reasons why the market can just continue to go up, positive vaccine news, the Fed, stimulus, all this kind of stuff. And so, what typically happens is that the market kind of, reaches, maybe it pushes a little bit higher than everybody expected. Maybe it breaks out of this range a little bit, but there's a few things to consider. I mean, you can look at some of these previous runs and they can definitely go on and be bigger than you could anticipate. But at this point in time, we're definitely not at we're definitely not at the bottom of a swing cycle, right? If anything, we're approaching the upper end of a swing cycle. I like to look at a few things that I look at to see if the market is overbought. One of which is, let me see if I got it here. Yeah, the funny thing is the RSI here is not actually overbought, although there's potentially a negative divergence emerging here, right? So, in theory, I mean, even if the market did push a little bit higher, unless this RSI, climbs, this is almost a guaranteed divergence, to be honest with you, because I can't even imagine a scenario where the market, sort of broke out here, kept going, and this RSI, look at where it was over here. It got up to 82.9. You see that? Which is, I mean, really pushing the envelope there. So, typically the way I have it marked here, typically, RSI 70 is approaching overbought. And then occasionally you'll get up, between 70 and 80. You can see a few times here, but this last sort of peak in the RSI was pretty amazing. And so, I mean, the market would really have to rocket higher from here, which, seems kind of unlikely, but hey, you never know. But I can almost guarantee that we're going to get a pullback of some significance before this RSI matches the previous one, and so there's almost guaranteed to be a divergence there. Not that that necessarily means anything in the longer term, but it happens, right? Look, there was one back over here. Back over here, you had this. Well, you didn't really have a higher high in the price, so I'm not sure that that counts. But you had the all-time high back here, back here, and then the big sell-off, and then when you made another new high, the RSI actually was higher. So that was that wasn't really a negative divergence, although there was a little one back here. But anyway, just something interesting. But so that's one of the things I look at. Technically, based on the RSI 14, the market's not really overbought right here. But what I like to look at, which I don't have up, but is the percentage of S&P stocks that are over the 50-day moving average. It's the AR50, SPX AR50 on stock charts, and every time that you get, around 70% of the S&P stocks trading above their 50-day moving average, that's typically where things are a little bit stretched. And I mean, it can go higher than that, obviously, but that's where things start to get a little stretched, and then you get a pullback typically after some period of time. So here's the thing: in 2 days from now is options expiration, and over the years, we've all seen how the market tends to run up prior to options expiration, and a lot of times it'll kind of drift sideways or just sort of hang on until after OPEX and then change directions. So look at this weekly candle we got here. It looks like one of the narrowest ranges that we've had, on the weekly in some time. I'm not going to say all year, but I mean, it's of course the week's not over. It's only Wednesday, but so there you go. So far we got an inside week, and really sort of tight range there. So not much happening on the weekly chart there. So anyway, there's the S&P, and when I look at this, all I can think of is that it kind of hovers around in the upper end here, and I could draw that upper trend line connecting the highs. I could draw it up there like that. But this day was kind of weird, right? This was the Pfizer vaccine news day, if I'm not mistaken. Um, and I mean, the market just went crazy in pre-market and all that kind of stuff. But I like I like drawing it like this because the first thing I did was connect the lows, right? Connected these two like cycle lows here, and if I draw the upper trend line basically across this high back here from what was that 9-2 and across the high from this past Monday, they almost look parallel. I mean, it's about as close to parallel as you can get. So there you go. So anyway, regardless of what happens here, um, watch out next week for perhaps a move back down. That doesn't necessarily mean it has to, go all the way back down to the lower end there, but get a little stretched here. You got options expiration coming up. Um, the news every day is filled with more cities shutting down, closing indoor dining, closing stores, that type of thing. And so it just kind of feels like we're going to go through sort of a repeat of the lockdowns and shutdowns, which basically, kind of reminds me of this big sell-off that we had earlier in the year. And quite frankly, with everything that's going on, it's almost shocking that the market is right up against the all-time highs here too. So it's going to be interesting to see what happens. Typically, this is the strongest time of the year. The market does act really well around, well, in the fourth quarter. October, November, December are traditionally, the strongest times of the year. You got the Santa Claus rally and the year-end rally, and around Thanksgiving, the market always tends to be strong. The small caps, as long as I've been doing this, I can always remember around Thanksgiving that the Russell 2000, the small cap stocks, seem to get a lot of action. So this is, you got to go all the way back to the weekly chart to see the previous all-time high, because I have it marked on here. So 2018, it was August of 2018 when the Russell 2000 hit this all-time high, and then I mean, here we are over 2 years later, finally broke back out, right? Making an all-time high right now. So that's kind of interesting, but I've seen people on CNBC that talk about the broad participation, right? Now that the Russell 2000 is acting well. So, it also, that is sort of a positive factor. But man, you know, look at where it came from, right? So that's if you look at the RSI on the weekly here, it's still, I can't really see what the value is there, but it's just under 70 it looks like. So just an extraordinary sort of straight up rally though. Pretty amazing considering, the small caps you would think would be um, vulnerable to, lockdowns and a tough economy and all that. So, and of course, last but not least, let's look at the Qs real quick here. Tech stocks are kind of interesting because, we get this whole thing right now where the technology stocks, I guess, are perceived to be the safe haven, during lockdowns and a tough economy and all that type of stuff. Whereas, the S&P stocks are not quite as well. There's just a sort of a divergence in the stocks that are perceived to be benefit from lockdowns and benefit from an opening economy. Obviously makes sense. So anyways, yeah, notice the Nasdaq's been a little bit sort of weak here. This pattern's a little different. Instead of having hitting a new high up here and having a parallel line to this, you've actually got a downward sloping line. So the high in the Nasdaq was back here in September, right? So it's an interesting little triangle too. Theoretically, you could kind of pull this down a little bit and ignore that gap up open there, but it seems to make more sense to use that high. So anyhow, the markets are all kind of a little bit different. You got the Russell 2000 all-time high. You got the Nasdaq, which is basically comprised of like five stocks drive this thing. And a lot, there's a lot of stocks that have just been sort of grinding sideways and not getting anywhere. Some of the big cap, big name stocks. Let's see, Amazon. Amazon's kind of, it's just kind of grinding. I mean, obviously it's up huge, right? It had the huge run up, but as of lately, it's got that big sort of triangle thing going on here, and it's got a ways to work itself back to the highs, right? There we go. So anytime you can draw a downward sloping trend line across the highs, then it's got some work to do because that means you had the high and then and then you had a rally and a little bit lower high. So as long as we're here, let's see, Facebook, same sort of thing. Kind of, it's not at the highs, it's kind of grinding sideways. Microsoft, same sort of thing. Made its high back here on September 2nd. It's kind of trading in a range here. What am I missing? Amazon, Facebook. They talk about talk about the FANG stocks, but you don't hear much about Netflix anymore these days, right? Google. Yeah, Google's right up at the high there, so there you go. Seems to be hanging on pretty well, but anyway, so back to the S&P. S&P right up at the highs there, and that's why we only have two open trades, right? So we have AMD and CL. So let's just look at those real quick. There's AMD. There's a lot to look at on the chart here. So basically, see, there's two trades here. There's two swing trades. There was a swing trade back over here. Remember, I was pointing out how the market pulled back and then had that upcycle, pulled back, another upcycle. So AMD's kind of a good swing trading stock in theory. And so this last one, triggered in at 79 and hit this target up here, and trailing stop caught up to it after it pulled back a little bit. So that was a decent little trade. And then it had this really nice sort of 1 month pullback. And then it triggered in a little weird this last time because it was on a series of gaps, right? You remember that a few weeks back where the market just kind of like had just runaway gap. So anyway, long story short, based on the fill here, the way it gapped way up over the trigger, I mean, it was significant. It still hasn't hit the compensation target. That would be way up here. Came close, but so far so good though. I mean, it's still sort of had a pullback, and it's still sort of in this upcycle here. The trailing stop, is kind of caught up to the trigger, although the fill would have been closer to up here. So it just needs a little bit more of, well, it needs to start a new push higher here. I mean, it looks like it might want to pull back, but so I mean, nothing too exciting right here. But the other one, CL, excuse me, choked up this morning on my coffee. This one's actually really took off like a rocket. So triggered in, well, the trigger price, I should say, was back here at 79.75. It's kind of, sometimes it's hard to get these on the chart. Maybe if I zoom out. Yeah, so this was the trigger price, and then this particular day, and then here's the actual open, the day that it triggered in, and I've seen a few of these lately. And of course, this was back in the same period of time where AMD just kind of like took off and went straight up. So that was just a function of the overall market. The market itself sort of had a breakaway gaps, runaway move over a few days there, and a lot of stocks participated in that. So anyway, so here was the trigger price, and this was the target. And what I did here was I took the difference between the actual trigger price and the open on the day that it triggered in, and I adjusted, I added that amount to the target to make what I call the compensation target, meaning that if you actually jumped in on the gap up, then obviously you'd want to, you'd want to compensate for the difference that you paid to determine your new target. So, and as you can see, like literally within 2 days, it blasted right through the target. And so you can see how the trailing stop started off like right under the lows of this crazy sort of bar here. I mean, look at the size of that gap. And then so anyway, it came up a little bit. And then when you had this 2-day move here, it basically, the trailing stop stayed the same for a while. It let all this crazy price action sort of play out, and then it came up. And so as we speak right now, the trailing stop's sitting here at 83, right? And the price continues to run. So looking pretty good there. We had a few trades that closed recently based on earnings. Walmart was one of them. Let's take a look at that. This was the last. This was the last open trade that just closed a couple of days ago because they released earnings right here. So that one worked out pretty well, and you can see the earnings reaction too. So this was the day. This was actually the day they released earnings. Was yesterday before the bell. Right? So we always close the trade at the open price the day before they release earnings. So there's no big surprises, right? Now something like Walmart, there's typically not going to be a huge surprise. And you can see that the price is kind of hanging, right where it was. But on some of these other, like tech stocks and that, you can really you can really get a big earnings move in either direction. So anyway, there you go. So that one worked out pretty well. I wanted to take a look at the pending trades just to see what we have on the list right now. Now here's the thing is, like I said, since the market's just had this big up cycle here, there's not a whole lot that's going to be on the pending list, because the pending list is stocks that have had a pullback and are beginning to set back up, right? So interestingly enough, Pfizer, Pfizer, which had this big gap up here that drove the whole market higher a week, it was a week ago Monday, right? So this past Monday, 2 days ago, there was more positive vaccine news with mRNA, but Pfizer kind of kicked it off here. And anyway, so this is a pending trade setup with a trigger of 38.70. And I'll show you how this works here, because it seems kind of at first, when somebody first sees how this system works, they get a little confused by, and this just hit the pending list, by the way, 2 days ago, right? So here's what happens is, and this is some kind of crazy price action too, because of, that low and that high, obviously news based. But so here's how it works is, like, you look at this and you think, well, why would I want to buy it up here, when the price is down here, especially, yesterday when it first hit the list. But see, that's not how it's designed. It's honestly, a stock hits the pending list, and typically the very, for the first couple of days, you'll see that the trigger price is going to be like way up towards like towards some previous high. And then the way it's designed is that, in theory, so this stock, pulls back, bounces a little. Well, it's bouncing a little bit right now, but the way it's designed is that, this stock would sort of pull back and kind of bottom out, and then this price will continue to come down, come down, come down, and meet the price at a lower price out in the future. So, I mean, that it doesn't always happen like that, but generally speaking, what we're looking for is a stock to have a nice pullback, base out, maybe put in a pivot low, do whatever it needs to do, but consolidate at a lower price. And so this trigger price will continue to sort of ratchet down, and then actually meet the price out in the future when it has another upcycle. This is not a good example at all because of this erratic price action, but typically that's the way that it works. So um, really not a good example, but you could go back over here. You had this big run up and then this pullback, and so if you kind of hypothetically take what I'm trying to say back in time, so maybe over here it hit the pending list, and then this comes down, maybe it doesn't trigger right there because of the close, and then eventually it floats down and meets it out in the future. Right, so let's look at the other one here. Maybe this might be a better example, quite honestly. And even this is not the prettiest looking chart that you've ever seen, but trigger right now is at 222. All right, so I mean, it did have a big run up, and then that looks like, well, I don't know, that looks like an earnings gap down, but sometimes these stocks, they have a big gap down on earnings, just like over here, and then they sort of base out and then run back up. And so kind of a similar potential situation here, but this is the type of price action. You get a sell off and then a consolidation and then a trend change, and then hypothetically you catch it on the way back up. So out in the future. So if this pattern repeated, right, 222. So there's where it is right now. And here's what I'm going to do just for the fun of it. I'm going to mark that trigger 222. I'm going to mark that right now so that when we come back next week, it'll be a good example of how this works, right? So back over here, pretend that there was a trigger, that this hit the list sort of after this sell off, and there was a trigger right here. And what would have happened was that trigger would have kind of floated down, and then probably, triggered in somewhere around here, right? And so it would have seemed sort of crazy at the time, just like this does. But I mean, look at that run up that happened. So, and like I said, this is kind of a sloppy chart. So, but it still has all the same, characteristics of, and plus, I mean, look at this thing, boy, all over the map. So it it tends to, and there was a really good trade in this back in the summertime. So you can see it had a big pullback and then a humongous run up. So there's a lot of potential out in the future. When we come back next week, we'll take a look at this and see what happens. So, and then of course, if the price continues to drop, it'll just drop off the list. So let's go to the last one here, Zoom, right? Zoom is, Zoom has really pulled back a lot. This is one of the sort of darling poster child stocks of the stay at home. It's kind of a crazy looking pattern here. So, but it is what it is, and it's a high powered stock that's had a pretty significant pullback. Right now, the trigger price is at 440. I'll mark that on here just so when we come back next week and look at this, assuming that it's still on the list, My guess is it would have to probably drop and break below this low. Like theoretically, if it kept going down at some point, down here, it would no longer be a pending trade. It would just drop off the list. But I'm marking this on here so that when we come back and look at it next week, that we can see we can sort of follow the progression of, well, the price and the trigger price, right? Because um, depending on what the stock does, if it just sort of consolidates and moves sideways, this will slowly start to drift down. If the price continues to drop and goes lower, assuming it, maybe it doesn't drop off the list because it doesn't go below, that level there, this low from back here in September. But anyway, theoretically, this could come down and come down and come down, and it could meet it out here, in a couple of weeks or something, when the stock sort of bases out and then turns back up, assuming that happens. But so that's kind of the idea of it. The idea is that, well, and the other thing is that this on 11/11, right? This day, this is basically where it hit the pending list, right? Like it didn't come on the pending list until this date right here. And so then it did, and it looks like the trigger's kind of like just right around that high there. What's that high? 435 and change. So, and this is at 440. So anyway, that's kind of the concept of it is stock comes down, hits the trigger, bases out. This trigger price kind of comes down, let's just assume that it was going to sort of chop around sideways, in this little box right here, right? For a while. And then theoretically this trigger could come down here to, 420, 415, and we'll just have to see. And so it just kind of depends on what the price actually does on how the trigger comes down and where it meets it. So every now and then, you'll see one of these stocks that pulls back like this, comes on the list, bounces around, and then just all of a sudden turns around and rockets higher. And then it seems like it triggers in like sort of at a higher price than you would wanted it to, but that can happen too. But, it is what it is. So anything can happen, but so the important thing is to keep your eye on that trigger price on the updates each night or in the morning. So because that trigger price can change, it just depends on what the stock actually does. But so this is sort of the concept of it is it starts pulling back, comes on the list. In theory, you'd get some tight ranges that would consolidate, and then you'd get a nice trend change. And so, you'd maybe see that on your indicators like your MACD and your RSI, and that would sort of pull back to oversold, bottom out, and then start to turn back up. And then we look to catch it on the way up. So, guys that have been around a while, I mean, I know that I'm repeating myself, but so that's sort of the theory. But anyway, not a whole lot to see with the S&P up here, pushing the highs. We got Thanksgiving coming up, so it'll be interesting to see what happens. Things may slow down a little bit next week, but a lot of craziness out there, so you just never know. Um, I'd be I'd be sort of, I feel like I'd be sort of cautious chasing here. Now they, like I said, with options expiration, they'll probably try and hold this thing up here, right? Um, the market loves to. I think the idea of options expiration is that the most options as possible expire worthless because that way the people that sell options, which is typically the big institutions, that way they make all the money. They sell options, and to people that think that the market's going to tank or something or whatever. I mean, they sell and then they hold it. I mean, maybe there's a bunch of calls way up here and there's a bunch of puts here, and if it expires like, somewhere in this area on Friday, then they just get to keep all the premium. So that's kind of so anyway, the point is that the few days leading up to options expiration tend to be suspect, right? Or at least that's the way I look at it. Is it's suspect because I think that price on a lot of stock kind of gets held at a certain level, and the other thing is that all the options trading leading up to it probably sort of zeroes it in closer to whatever the price is. So anyway, I could be totally wrong on all that, but next week will be interesting, and then of course it's Thanksgiving. So what we'll do is we'll just I'll leave it at that, and then we'll come back and we'll see what's going on next week, the day before Thanksgiving. So anyway, thanks for tuning in. I will see you back here next Wednesday.